All right, we're live. So welcome back to Dapp University. So today we've got two massive announcements to talk about in the crypto space that I think are going to be huge for this entire industry. Okay. We're going to talk about those today, what they mean for the entire space going forward. We're going to check on the crypto markets, answer some of your questions, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat here. We've got Culture Hives, CodeChap, Jake and Agnes, Egghead, Dirk, ZeroFX, Automatic Beats. Welcome, welcome, welcome. All right, so let's go ahead and jump into this. So let's just see, which one do I want to talk about first? They're both pretty big. Let's talk about one that I think probably has a broader impact on the crypto space as a whole. Let me just pull up my screen here. All right, so the first major announcement that I want to talk about is Stripe, all right? Starting up a crypto team. Okay, so if you don't know who Stripe is or why this is such a big deal, so Stripe is a payment processor that typically processes like credit cards, debit cards online. You know, I don't want to say vast majority because I don't happen to know the market share statistics off the top of my head, but a huge slice of online retailers out there, I'll put it that way. It's probably the most accurate way that I can confidently say this, use Stripe. So it's super common if you're like in a Shopify store or in any like kind of like bootstrap startup, but also much larger companies. I mean, Stripe processes insane amounts of transaction volume every single day. I've used Stripe a lot. If you're a developer and you've ever built an e-commerce store, you're usually having to integrate like Stripe or PayPal as kind of the go-to payment solutions for these types of things. And so Stripe is actually creating a crypto team. Sorry, I clicked on the wrong. Oh my gosh, guys. I just clicked on the wrong hashtag. This was like trending on Twitter. Let me just close it. No broad day is trending on Twitter. That's awkward. Okay, so anyways, Stripe is getting into this crypto game. We are starting a team. And I don't know exactly what they're building, but this is going to be huge, okay? Because what you have to understand here is the broader implications of what's happening with the crypto market, okay? So basically, what we're seeing is people who are in traditional payment systems can't exactly ignore crypto because they're see the two things. Number one, just the user demand that's like taking off like a rocket ship. And the other thing is that how crypto actually makes the traditional payment system better from an implementation standpoint, okay? So I saw this tweet come up yesterday. Let's just see here. I saw this tweet come up yesterday from Kane, who started Synthetics. So this was pretty good. He says, would love to be a fly on the wall when the new team presents Stripe 2.0 to all the poor people who have been grinding away in legacy payment API hell for a decade. So wait, you're saying it's just like execute a single function and the money is transferred automatically? That's it. That's one of the reasons that crypto is so insane. So one of the reasons that it can improve the payment system is better, faster, cheaper in terms of actually transferring the money around. That's one of the things that makes crypto great for payments, especially stable coins. If you're trying to do a wire transfer, just sending stable coins from one account to another makes things a lot cheaper and a lot faster in many cases. But also from creating something from scratch, from actually development standpoint, crypto can make these things a lot faster as well. So, you're talking about, it's not that hard to implement something with Stripe as a developer to create, integrate an API into your application, all that kind of stuff. But to actually build the infrastructure that is to create something like Stripe that actually processes the payment transactions, that's way harder, okay? And so when you can create a public blockchain infrastructure that facilitates this process, and like he's saying, if you want to create, infrastructure to transfer, I don't know, $100 million or something like that, all you have to do is make a function call and it's transferred automatically. So this is huge, all right? I think it has a lot of broad implications for the crypto space, particularly because we're seeing almost all the major payment processors come on board and now plan to support crypto in some way. PayPal, Stripe. We're seeing not just payment processors, but major companies like Visa, all right? Talking about layer 2s built on top of Ethereum. We've seen experiments with MasterCard in the past. I mean, it's one of those things where the snowball is starting to turn over and get bigger and bigger and bigger. And these are the types of things that, might not be as impressive to people who are just getting the space now and think, oh, this is crypto. This kind of stuff happens all the time. But that's not really true. Okay. If you had been here in crypto 2 years ago, any news like this would have sent the Bitcoin price to new all-time highs. Okay. But what you're witnessing now is really a technology adoption super cycle. All right. And I don't know that's necessarily going to translate into a cryptocurrency super cycle. It very well might. But what you're seeing here is basically a lot of insane, a cluster of insane adoption happening in a really short amount of time. And yeah, you definitely have to pay attention to this. Absolutely huge Stripe's getting into space. So another article that came out yesterday, another announcement that I want to talk about that I think is going to be huge for the crypto space on the whole. Let me know what y'all think down in the comment section below. So the next major announcement I want to talk about here is what Coinbase is doing. So Coinbase is planning to launch its own NFT platform to take on OpenSea. Okay, so this is big for the crypto space for lots of reasons. Okay, number one, we're starting to see what's more and more possible with NFTs in the first place. Okay, I've talked about a lot on this channel recently how I'm excited to see what can happen with NFTs beyond just being, digital collectibles, that you can simply just appreciate the artwork itself and then own that and trade it. I do think that use case will stick around in perpetuity, especially for early projects that have some sort of significance around them, all right? But I'm excited to see what's going to happen with NFTs that offer benefits beyond that, like membership to a community or some sort of other, sort of tangible benefit. We did talk about recently you have to be careful about NFTs that offer some sort of passive income reward because the SEC might not might not categorize that favorably, and they could be cracked down by regulators. Definitely, you have to be careful about that. But yeah, the future, in my opinion, is really bullish for NFTs. We're just scratching the surface of what's possible with them, and I think Coinbase knows this. Okay, and this is one of the reasons that we see Coinbase actually launching its own NFT platform to take on OpenSea. Okay, so yeah, also the thing you have to think about is, Coinbase is now a publicly traded company, and so they're going to be, beholden to public shareholders. All right, they're going to be having to kind of be on that treadmill of trying to find the new and next best thing. They've kind of always been on that because they've always wanted to create a valuable company. But a lot of what their actions now are also going to have to affect public perception of Coinbase, and that's, I think, another motivation for the move here. But yeah, I think this is big, and so here we have a mock-up of what it could look like. All right, so this is just a concept art; it's not necessarily the final thing that we're going to get from Coinbase. But this, you can see, it kind of looks like, they took, you kind of riffing off the OpenSea idea, but you have it, in a la Coinbase, in the style of Coinbase. So you can see like a profile picture here, verified handle, name, and then your NFT collection here. You can own, you can do liked, you can do created. Okay. So one thing to know, we're currently getting a wait list for this, for a launch in the United States. Okay. So they're hoping to launch this by the end of the year, though. So let me know what y'all think down in the comment section below. What do you think about the Coinbase NFT drop? Somebody says, it makes me want to stop building my NFT marketplace. All these big fish will own the ocean. Yeah, NFT marketplace is a challenging project to, capture a huge amount of market share with. I don't know what your experience level is and kind of what your end goal with that is. If you're kind of newish to blockchain, I would keep working on it, because that could have some benefit outside of, let's just say you don't become competitive in the NFT market space, there still could be a benefit that you could get from going down that journey. All right, so anyways, the NFT announcement from Coinbase is huge. And then I wanted to look at a follow-up tweet here from Brian Armstrong, who's the CEO of Coinbase, kind of commenting on this. let's see here. So he's saying exciting to see every major fintech company is now doing something with crypto. Let that sink in for a moment. So actually, sorry, this is about the Stripe news. He was talking about this. I was talking about Stripe before, then we switched over to Coinbase, NFTs, but he's talking about Stripe. So excited to see every major fintech company is now doing something with crypto. Let that sink in for a moment. And most major social companies, Twitter, Reddit, Facebook, Twitter with the NFT profile verification. We talked about that recently. Reddit with their community points. Facebook with their to-be-decided stablecoin payment, something like that, right? And you're talking about gaming is next. So crypto is Web 3.0. I made some videos recently talking about Web 3.0, how it's big. It's kind of the overarching trend that we're in right now. He's saying that crypto is Web 3.0. I expect more applications of Web 3.0 to come out soon. On the grand scheme of things, social media, whatever it is. But gaming is definitely a big part of this sector. And Brian's saying, hey, watch out for it. Okay, so let's go ahead and take a look at the crypto markets here and kind of see what's going on. So, I kind of want to focus a lot on Bitcoin, simply because I think Bitcoin is leading the show right now. Bitcoin dominance has increased quite a bit. Bitcoin's been on a pretty solid, run for about 2 weeks. Okay, and I want to actually go to the tweet thread that I saw yesterday that I thought was pretty good to kind of talk about fundamentals of what's happening with Bitcoin. Let me pull it up here. So basically, Bitcoin has kicked off Q4 with remarkable momentum. So a quick thread on the key indicators and near-term catalysts leading to Bitcoin's growing strength. This is from Lucas here. So anyways, despite the stock market's bearish trend, so what's been happening in the stock market right now, Bitcoin continues to push higher. So Bitcoin is showing a negative correlation with traditional finance, which has not been the case in prior drops. So this reinforces the uncorrelated asset thesis, making it more appealing to investors seeking diversification. So that could be a reason why people might want to buy Bitcoin who are in traditional finance right now. So looking at on-chain data, we observe increasing demand for Bitcoin. So people appear eager to accumulate, as shown by the increase in the number of addresses holding at least one Bitcoin. So Bitcoin investors are showing long-term conviction. All right, number of addresses holding Bitcoin for over a year, so holders or hodlers, however you want to say it, has consistently grown as is currently at an all-time high. I think it's supposed to be and is currently at an all-time high. So transaction volume on Bitcoin's blockchain has been on a strong upward trend, reaching new all-time highs, despite price remaining below $60,000. Thus far in October, Bitcoin has seen an average of $205 billion getting settled per day. Okay, so not only is it institutional adoption here, but it makes up a majority of all volume. So a majority of the volume that's trading on Bitcoin now is from institutions. Institutions as whales have been actively using Bitcoin, with 99% of all transaction volume coming from transactions over $100,000 in October. 99.2% of all Bitcoin transactions have been ones of over $99,000. We'll talk about that point here in a minute because I think it's really interesting. I'm going to circle back to it. So moving on to derivatives, traders are showing a strong bullish bias. Okay, so we talk about the funding rates have reached their highest levels since May. All right. So what's driving increased demand and optimism for Bitcoin? This is actually going to the fundamentals. So potential approval of a Bitcoin ETF. Been talking about that a ton in these live streams. At the end of the day, it's still a rumor, in my opinion, until we see something actually hit, or real solid proof. Upcoming Taproot upgrade. I'm actually gonna make a video coming about that, so subscribe to the channel. You'll find out about that when we come out. People have been asking me to talk about Bitcoin Taproot, so I'm going to. And then a feedback loop between price and fundamentals. So, anyways, there's a little more to the thread. You can definitely go check it out if you want to. Let's take it here. Let me just find the thread. Here's the Here's the tweet. I'll put it in the live chat replay here. Okay. So yeah, I think a lot of this is spot on. And so one point I want to go back to is talking about some of the large transactions on top of the Ethereum network, or sorry, the Ethereum network, the Bitcoin network. How transactions over $100,000 in U.S. terms, are over like 99.2%. So almost all the Bitcoin transactions are high U.S. dollar amounts, or at least 2 Bitcoin about at the current price levels. So one conclusion that you can draw from this, or a few conclusions you can draw from this, is that, big money prefers, Bitcoin compared to, smaller money, right? Or at least to perform transactions on the Bitcoin network, okay? And so what are the reasons for this? Well, I think there could be lots of reasons. I'm not going to point to a single factor, but Bitcoin, the amount of time that Bitcoin has been around, the amount of price history that Bitcoin has, basically the decentralized ethos of Bitcoin, in the sense, people are, for all these various factors, people are trusting larger amounts of money on this particular network compared to smaller amounts of money. Now, you could also draw the conclusion that smaller amounts of money are priced out of new Bitcoin transactions because they're expensive, or, smaller money doesn't want to invest in Bitcoin because they don't see as high upside potential, all that type of stuff. I get it. But the whole point is there is value in a older, bigger blockchain with high security model. And I'm going to kind of take that logic and apply it over to something like Layer 1 Ethereum network. So a lot of people are wondering about what's going to happen with Ethereum Layer 1 long term. So I'm kind of switching gears here over to Ethereum, because I've talked about Layer 2s quite a bit on this channel. And what's going to happen to Ethereum 1.0, what's going to happen to Ethereum 2.0 whenever it comes out? Like, are the transactions, is it going to fix all the transaction fees? Is it going to make things faster? Well, Ethereum 2.0 in its final form will be faster than Ethereum 1.0 than it is today. However, it's not going to necessarily be that much cheaper. Okay. And if the price of Ether continues to rise, it definitely won't be cheaper in US dollar terms. Okay. But that being said, so what's going to happen? Well, you might say, well, hey, then nobody's ever going to use Ethereum. They're just going to go do a different blockchain. And to turn around, I would say, yes, but it's a Layer 2 blockchain, okay, on top of the Ethereum network. And we're seeing this happen with Arbitrum, all right, grow significantly. Some really impressive stuff happening with Arbitrum. Some other Layer 2 scaling solutions like zkSync that I want to talk about shortly as well. Definitely Optimism, all that type of stuff. But what's going to happen to the actual base 1 Ethereum layer? Well, I think essentially it's going to become a sort of whale chain, all right, kind of like Bitcoin. Or what's happening with Bitcoin right now. We're seeing, certain transactions on Bitcoin are only above a certain price threshold. 99% are over $100,000. I think you're going to see something similar like that happen to Ethereum Layer 1 as it transitions to ETH 2.0 long term, because the fees on the base blockchain itself aren't necessarily going to decrease that much. So why would anybody use it? Well, it's because it's going to have the maximum security and decentralization, because whenever you're building these Layer 2s on top of Ethereum, there will be some trade-offs, all right, made. And maybe not necessarily in the implementations themselves, but you still have to move your funds from one place to another. And there's always going to be some level of risk anytime you're, moving funds from one environment to another, whether you're doing that move on an exchange, whether you're using a bridge, whatever it is. Somebody with a large amount of money might see that as a potential risk and may not want to leave off that environment. There could be other reasons too, just like not wanting to, they might have to give up their identity if they use a centralized exchange to make that bridge. There's lots of reasons, right? But I think that we'll see a strong preference for large holders to use Layer 1 Ethereum, still transfer tokens around Layer 1 Ethereum, all that type of stuff. Even if the gas fees don't subside in Ethereum 2.0 on the base chain itself. Now, I'm super excited about long-term proposition of Layer 2s, and we're seeing TVL of Layer 2s basically reach a new all-time high, or back up to their all-time high. So let's see, the last one was about 3.5 billion. 3.57. we're basically there. Okay, we're at 3.55. All right, I think just in a matter of days, we'll be printing new all-time highs for total value locked on layer twos. So the adoption for this is moving fast. Now, of course, with the TVL metric, you can always read into this and say basically, TVL can increase just because as a function of cryptocurrency markets increasing, right? Because total value locked is highly dependent upon the price of the assets in and of themselves. But to which I would say, okay, we're back at the same TVL and the Ether price is lower than it was back in September. So it's still an increase in the number of units of cryptocurrency locked. So if you look at the Ether price, on September 7th, or about September 7th, it was almost $4,000. And this was back in like September 7th. It's like, yeah, so it's crazy. All right, so one thing I mentioned layer twos. I want to talk about some crazy stuff that's happening in this space. Something you definitely keep on your radar. I'm probably going to talk about this more, maybe in a live stream or another video. But this is so zkSync is definitely one you want to watch out for, and zkSync is coming out with this zkEVM. Okay, this is going to be Unisync, the first migrated Solidity Dapp on the zkSync 2.0 testnet. So definitely watch out for zkSync as a layer 2 scaling solution. Zero knowledge based rollups, in my opinion, are really great. And I'm trying to think of the best words to say this. Probably one of the optimal scaling solutions for Ethereum based applications on layer 2 for the long term. Now, optimistic rollups have definitely gained a lot of traction, but one of the big downsides of optimistic rollups is the amount of trust that exists in that system, and also the amount of time it takes to withdraw funds off of an optimistic rollups based scaling solution. Now, there are ways to circumvent the withdrawal time that still adds an additional level of trust, but with zk rollups, it minimizes trust significantly compared to optimistic rollups-based solutions. So definitely check out zkSync. Like I said, they're coming out with their zkSync 2.0 testnet with the zkEVMs. This is just their version of the EVM, and they've actually ported Uniswap version 2 over to the zkEVM, and you can actually test it out. So I'm going to demo this probably, so stay tuned for that, and you'll find out about whenever it goes live. And we can actually see some thoughts on this. So this is from Tetranode on Twitter. So the holy grail of layer 2 scaling, zkSync allows two-way hops between L1 and L2 within reasonable amounts of time, important for composability and liquidity. All right, he has a cool spreadsheet here from Matter Labs talking about, the different layer 2 scaling solutions and what their trade-offs are and their performance statistics, all that type of stuff. Yeah, it's awesome. All right, so let's see if we got any questions here in the chat. Some of this is 8,000 in gas fees. Never check how much you've paid in fees. Yeah, there's definitely a website, like I think it's fees.wtf, where you can see how much you've paid in gas fees with your Ethereum wallet. They do it in current ETH prices, I believe. So it's a good question. Somebody says, recent questions about Bitcoin 21 million hard cap. Do I think that the cap will ever be increased? So that's a good question. So here's the common problem brought up with the Bitcoin 21 million hard cap, in case anybody's kind of like new to the conversation and wondering why we're talking about this. So basically, the whole idea with Bitcoin is that there's a hard cap of 21 million Bitcoins. So that basically means that no more than 21 million Bitcoins will ever be mined. So Bitcoin has a fixed issuance schedule. So basically, whenever you mine Bitcoin, the network, so say I send 1 Bitcoin from my account to yours, okay, just 1 Bitcoin. Well, whenever I do that, that creates a transaction on the Bitcoin blockchain. That transaction is mined by a miner. It's included into a block that's included into the public ledger that is the blockchain, okay? Now, I pay a fee whenever I do that, and then the Bitcoin blockchain also creates new Bitcoin. That's part of the fixed block reward that goes to the miner. So the miner's getting paid 2 ways, all right? He's getting paid from, she is getting paid 2 ways, by my transaction fee, and then the block reward that's produced by the blockchain. Okay, so they get paid 2 ways. Now, you might have heard of the Bitcoin halving, which basically means every 4 years that the amount of Bitcoin created by the blockchain essentially gets cut in half. So in Bitcoin terms, every 4 years, Bitcoin miners are getting a pay cut. You see what I'm saying here? And that's going to keep happening every 4 years until we eventually mine the last Bitcoin at a theoretical maximum of 21 million Bitcoin. Now, that's probably not going to happen for like 100 years, but functionally, you're going to go down to hardly any new Bitcoin created, all right, from the Bitcoin blockchain itself. You're gonna approach that problem way sooner than 100 years because of just the increasingly small halving, the small amount that happens after you have the value that many times. Okay, so here's why it's important, because the miners keep getting a pay cut, and in order for the miners to actually be incentivized to run the network, they have to get paid somehow. And what's going to happen essentially is that they're going to be highly reliant on the fees that the users pay to make the network viable. And the problem with that is it introduces a significant security risk to the Bitcoin network. Okay. Now there's been lots of talk on how to address this problem. Some people have proposed, like the commenter said a minute ago, I forgot exactly who asked it, sorry about that, said like, hey, are they ever going to lift that 21 million Bitcoin hard cap? They might. You know what I mean? I think a lot of Bitcoiners right now would say, oh, no way, it's not going to happen. I'm not here to really be super dogmatic one way or the other on how this is going to work. But I just know this is a conversation that comes up. A lot of people don't like to talk about it because that's part of the ethos of Bitcoin, is that it has a fixed supply that you don't mess with. It's hard money that can't be tampered with, all that type of stuff. But there is a potential existential threat sometime in the future. And one potential solution to that problem is to just create more Bitcoin. I'm not saying that's what should happen. I don't have the right answer necessarily, but it's going to be a long time before we have to worry about it. I think we should worry about it sooner rather than later, but... All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step by step, start to finish. over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got, and until next time,